Hello, and welcome back to Explain the Charts. Today is April 16th, 2025, and we're taking a look at Apple, ticker symbol Apple. We will be going over recent news and events surrounding Apple and try to correlate them with what we're seeing on the charts. Recently, we've seen headlines about surprising China news sending Apple stock surging, and analysts debating whether Apple stock is a buy. There have also been reports discussing Apple's potential in AI and projections for the stock in the coming years. Looking at the daily chart, we can see a lot of volatility over the past year. There was a notable dip in early March of 2025, followed by a partial recovery. The daily chart shows a significant price decline in early April 2025. This coincides with the tariffs that have been implemented, heavily impacting companies that rely on imports, particularly from China, which we covered previously. On April 9th, we saw a large green candle going up to almost 200, before dipping back down for the rest of the week. Then on April 11th, we see another large green candle going up to 212. Let's zoom in on the last few weeks, using the 1-hour chart. Here we can see the large candles more clearly, with intraday volatility visible around each of those days. In the very short term, we've established support around 200 and overhead resistance around 212. A convincing break above 212 would likely lead to a test of higher levels, potentially towards the $220 to $230 range seen earlier in the year. However, failure to hold $200 could send the stock lower, potentially retesting the $190 level from early April. Now let's drill down to the 15-minute chart to see recent price action and look at the action that happened recently. Here we can see that price has been trading mostly sideways recently, with today hovering just above 202. To summarize, we're watching key price levels for Apple. First is the 200 psychological level for support, which is key to hold. If we fail to hold 200, there's a high likelihood of testing the 190s, with a potential drop even further. I'd put this at around 60% likelihood without more news to drive the price higher. On the upside, a break above 212 could trigger a rally towards the 220 to 230 range. I'd give this a 40% chance, contingent on positive AI developments or a resolution to the tariff situation, which would likely increase this. Remember to stay informed about market events and adjust your strategy accordingly. Thanks for tuning in to Explain the Charts.